Hey guys, Mike here. So, boy, what another red day. And like I said yesterday, one day don't make a relief rally, okay, or any kind of rally. So, you got to have at least 3 of those puppies in my book. Let me know in the comments if you disagree with that, how many days you're looking for. But we will look at stuff in the chart to say, okay, here's where we're at. Okay, you got to stay calm. Here's what we're seeing. It's a whole like freaking 12-minute members video on this stuff. And I'm doing more market updates than research type videos now because of what's going on in the market, which is fine. But understand, I'll tell you a hint. If you open up in pre-market and you see that 10-year rising, you can almost bet by your watch. They're going to start rolling out the Commerce Secretary, the Secretary of the Treasury, and they're going to start talking about this reset stuff, right? Where they're shifting stuff from the government to private sector. That's what they did today. As soon as the 10-year started spiking, even though we had what's crazy, right? Really good PPI numbers. One of the best reports I've seen as far as like coming in way under what month over month was supposed to be, came in under what, you know, the year over year, even though, again, inflation, core, and everything else is still like 3% or higher, so the prices are still going up. But usually on reports like that, you get a really nice pop, and we got like nothing, honestly. We got a pop, but as soon as that happened, here comes the interviews, and the 10-year started going up, and it was like they just rolled out there for hours on end talking about this reset, okay? And so that's just what's happening. And by the way, just for the record, let me say 2 things. One, just because I have a Southern accent does not mean I'm stupid, racist, or belong to a hate group. I don't know why I see that in the comments. But that's just, you know, quit stereotyping people. And the other one is, I don't care about the politics. If I bring you something, I'm trying, it must be affecting the market, okay? It was hard to bring you anything during the Biden administration because all they were doing is pumping liquidity in the market. So that's what I'd bring you. Look, don't have to pay student loans, don't have to pay rent, don't have to, you know, all this stuff, student loan forgiveness. But there was none of this, you know, reset stuff, right? Now we're getting reset stuff. So you need to understand what's affecting the market. I hate both parties equally. I think the 2-party system is destroying this country. And so I don't care about the politics of it. So again, if you get triggered by that, go look in the mirror or something. I think maybe you need to redo your stuff or something. I don't know, but it shouldn't trigger you. That's literally what's happening in the market. Okay. And so that's why I bring you that stuff. And so that's what happened today. They rolled out, started doing that, and the market went up, 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 up. And it's so controlled down. And we're going to talk about that. It's so controlled down. And for those who are thinking, like, look, you hadn't had a capitulatory day yet, okay? If you don't feel like you need to lean over and throw it in a garbage can, and you're not seeing every single sector go down by like a 1 to 3% move, I mean, just like craziness like that, and people on Twitter, you know, acting crazy, all, you know, just everything's going nuts, like that, we hadn't had that yet. I'll show it to you in the chart, and I'll show you what we're looking for, okay? The things to start looking for on that very clearly. So, you know, I'll look at this right here, and thank you guys who watch the videos, share the videos, give the thumbs up. You know, subscribe. I appreciate it. I really do. And then, by the way, before I start this, please put your questions for Saturday's video in the comments, okay? And I'll try to get to them the best I can on that. So now let's get into this stuff because, again, it's a kind of a loaded video, but we're not going to talk about too many charts. There's only a few charts you need to be watching right now. I didn't like this right here because I believe you had to find ways to laugh when markets are doing this. And it says, know your risk profile before investing. And you see these 2 giraffes saying, come in, guys, it's not deep, and you see the bears and the bunnies, right? So that all about risk management, all about, you know, trying to preserve capital at this point in time. But again, you got to find a reason to laugh. One of my members sent this to me, and I thought it was amazing. And again, this is what you're looking at here for, you know, when the market's going down. Remember this: when/why bad things happen to good markets. Since 1928, it's almost 100 years, the S&P 500 has been down more than 10%, only 12 times on a total return basis. So at the end of the year, only 12 times out of almost 100 years has it been down by 10%. And most of those, obviously, when you have crashes, right? Very close to the end of the year. 8 were due to recession. We see all those right there, 2001, 2008. 3, so remember in 2020 we shut down the world. We still didn't end down at all. 3 were due to World War II. As you can see right there, and then major geopolitical tension in 2002, and 1 was due to a Fed rate shock that didn't cause a recession. That was 2022. We didn't have a recession in 2022. Okay, so keep that in mind. Now, where was money going, flowing in last week when I got this right here? Shouldn't be no surprise. Some of them might be, like consumer cyclicals, absolutely not. What really surprised, though, look at large caps. Hardly anything, right? So shouldn't be a surprise if it sold down, I guess, right? U.S. broad equities, and then all of a sudden bonds, right? Bonds were where people were flooding into. We've been talking about this for a while, trying to capture this yield because they believe the 10 years going down and everything, and bond yields are coming down. They want to capture that now, so they're doing that. And so that's where money was flowing last week. I don't think it's any surprise after seeing what the market's done this week. Now looking at SPY, once again, here's the daily expected move. They're huge because the VIX continues to stay elevated. Huge daily move still. Again, we've been, I guess, the last 2 days ending up in the daily expected move. And I believe if I go to extended hours, like right there, as soon as 4 o'clock hit, they pumped it up right there at the end of the day and got us right into the daily expected move. But you can see it's just hitting supports and breaking them like tree limbs, right? I mean, that's what happened. And that right there, that little candle, that was the PPI candle. You can't even tell. Like this is a 15-minute trade. You can't even tell it was nothing. It was like a 0.4% pump or something, and then just kind of dumped, okay? And so there's certain levels here, obviously, going to be key coming into tomorrow for sure. There's no doubt about that. And I know everybody keeps saying, man, are we going to get a relief rally? What the heck is going on? A lot of people are surprised, including myself. I think everybody's surprised by now. As I was talking in the members video, when you look at the chart, there's just been nothing. And normally, I went back in the last times you've seen this, it's bear market type price action. But even in those, like 2022 crash, you can look at it, there was 3 to 5% pops, multiple for that matter. It was like 9% pop in 9 days. Okay, and so big difference there. If we do obviously continue to sell down, we come over here, you know, you want to start looking like that's where it's at now. But if we break that, like 540 is your next level, you're looking not to break or to hold. That's really the next level you're looking to try to hold if this continues to come down, because a lot of times you'll see it come down 11, 12% sometimes, right, when this thing starts. But this one's just been so like controlled and stuff. It's been crazy to me. And definitely a couple levels to watch tomorrow. 550, 545 it looks like with support. Another one's going to be the 558.65. So we rejected 4 times off that 15-minute chart before finally dropping down. So that'd be another one. To even get to the rest of these, you're talking about like almost a 2% move. Don't forget though, the last 2 Fridays, what's happened. Okay, go back and look at that. I think, if I'm not mistaken, didn't we end green the last 2 Fridays? Started red, end green. So we'll see that because it's been, I mean, obviously a rough week. Look at the Qs though, and what we're looking for, volume. I usually don't look at volume, but you look at this sell-off, all of a sudden the volume has slowed down, right? And here it was increases, and now it's starting to slow down. Now, does that mean something? It could. This is sometimes when you'll start to see how reversals form and the sell-off starts to ease down. But always look at past behavior, right? It doesn't have to happen like that, because when you go back and you look at other types of sell-offs like this right here, and you come over the last 10% correction we actually had, you can see right here, obviously selling down, went down about 15% on the Qs right there. And you can see volumes obviously increasing coming up through here. And then you had this huge spike. So it wasn't a decrease in volume. You had capitulation. You see this right here? We dropped almost 10% in 3 days. And people were throwing up trash cans. That's what we're talking about. And then all of a sudden you get this huge green candle, right? When we drop down and you get this huge green candle right there. And then you saw a big move up. So kind of what we're looking for, right? Is just if you can get this big green candle, and that may signify a reversal. But again, do we get the capitulation or not? That's the question. And so that's what we got to find out. Apple, and I put that on the Qs because basically it's the Max 7 been weighing this stuff down, right? Now, 3 charts you just got to watch. You don't even have to watch really any of the charts. One is Apple. It finally, I mean, this thing has just been death in the last 4 days, right? Came down that 0.79 fib, and I've showed you this before. Distribution, man. Clearly, you look at Apple's chart and you look at this chart, pretty much looks the same, right? They aren't identical, but look at that. Doesn't that look like the Apple chart? That's distribution, okay? I've showed it to you on NVIDIA, which played out. I've showed it to you on Microsoft, which is playing out. And so again, is this a place it could bounce? It's at the 0.79 fib, and I drew these fibs way down from where like this whole rally really started, okay? And so this is in a major discount. Here we are once again. You're seeing this a lot on a lot of these. You come over here, you look at Microsoft. All right, same thing, major distribution right here. But what's it holding? It's holding that area we've had marked out in the last few days. There's that trend line of death. Okay, got to break the trend line of death. Forget about a green bar volume. That's great. Got to start breaking these trend lines of death. Okay, Nvidia held up really well today, really well. I mean, I'm telling you, between 113 and 116, but that 115, 116 was awesome today for it. It was actually green most of the day. That was what was crazy when everything else in the market just kept going down and down. And it was holding, okay? Look at that right there. That's Wednesday, and that's all the way through today. Just look at that range right there. That's pretty crazy, right? So anywhere, mark that on your charts. That's your range. You get above that range, you know, again, why are we looking at these 3 stocks? Very simple. So look for it to break 117, a whole 117. But this is why. Just those 3 stocks in the S&P now, just the S&P, make up 19%. If you want to add 2 more, feel free to go ahead and add 2 more, and we'll look at Amazon and Meta. That'll give you 1/4 the S&P right there. Look at that, 25%. See that right there? And you look at Meta. Where's it at? 0.79 fib. It's in a major discount as well. Pulled the fib all the way from when we started making a nice move up right there. And it's in major discount, down 20%. Look over at Amazon. We've talked about this one right here as well. Some blue in the face. Rejected at the 200. Where's it sitting at? It's in a discount as well. And I pulled this fib from way down there, okay, when it started this big move up. And so again, it has a trend line of death, just like most of them do. And so that's the stocks you look at. The other thing really you're looking at too is, are any of these oversold now? You know, and probably what's going to stun me, I don't know if it shocks you or not, but as much as we've talked about Microsoft and as long as it's been selling off here, what's crazy is you'll see this, it's not even oversold. To put an RSI up, Amazon, oversold, right? It's hit on the daily. It is oversold in the daily. Meta, surprisingly, hit oversold yesterday. Go up here, we'll look at Apple. This surprised me. This thing is definitely oversold, even though it hadn't been selling anywhere down as much near as Microsoft. Microsoft, still not oversold on the daily. And then NVIDIA, we talked about, still not oversold on the daily. So can they go down farther? Absolutely, okay? Absolutely, there's no doubt about it. But again, are we ripe to at least get a relief rally? Sure. You can look back at any other sell. I showed the members today. You look back at 2022, 2018, multiple times. Last 2023 was it? July to August. All that stuff, which I just showed you one of them. I mean, you know, they can go down. Usually 11, 12 is about the magic number. Or sometimes you're coming into a trend line support, which we're not doing that right now. But the problem is the administration is not letting this off the map. So the question is, and I said this last week and it played out so far, if the market tries to rally up as a relief rally, that's what it's going to be called at first, or a short squeeze, and the 10-year starts to rally with it, what happens? Okay, that's the big question, because they keep wanting to knock it down, because also they don't want just the 10-year down for borrowing rates. They want to force the Fed to cut rates as well. It's going to be hard because remember, PPI still and CPI still over 3%, but also the job data keeps coming in okay. Right? It's not disastrous. The unemployment claims came in under again. That's the second week in a row. Are they cooked? I don't know. I'm just going by the numbers they give me. Okay, that's all I'm doing. All right, but you don't see unemployment going through the roof right now. Unemployment claims aren't going through the roof. And then, you know, again, a lot of this data as far as like the job layoffs in the government sector hasn't hit yet. That's what we got to figure out. Like when that starts to hit, is it going to be a big whopper? Like, oh my goodness, that was a big move up, or not? Because remember, they're still paying a lot of those people. Right? They're still paying a lot of them, so they won't show up yet for many, many months. And so, and then a lot of them took payments to retire early. So they're not going to show up on there either. That's what you got to remember on this. Now, looking at just a couple stocks that had news, right? Hims got nailed, down 8% pre-market. Basically, I guess a lot of guys who were trying to grow hair out or whatever got sick, and they sold a lot of this stuff. So again, that freaks people out. I don't know if they're doing a lawsuit, what they're doing, but that got Hims down on a stock. Of course, it didn't need that. It might as well have been a short report because already down 50-something%. So, you know, going down even more now, almost down 60 now. And like I told you with this one, there really is no true support until you get down between like 23, 26 bucks. Okay, this right here was trying to turn resistance into support, and it is starting to fail to do that. Again, these are one of these high flyers. Retail loves this thing and all that fun stuff. And then there's the institutions in it as well. But again, that right there, especially 24, 29, that's really would be true kind of support right there. We flipped it from support, resistance and support. That would be a good one. If you pull up the volume range, volume profile on this thing, I mean, you can kind of see really where some other tree limbs are. If it decides to keep coming way down right there, you can see it right there. So truly the POC right there at 2109. All right, but you see support starts around 23, 24. And so if it wants to come down, it's still got room to come down. So if this market continues to press down, it will. If we get a relief rally, short rally, this thing is going to go up pretty fast like most of them will. Okay, that's just the way it is. Now, Intel, again, terribly ran company, absolutely terribly ran, but they got a new CEO finally. Boom, 15% pop today. Hit the 200, got rejected. Now, remember, we've been through this news event again right there the last time you saw it and sold all that off. So this isn't like, oh, they're fundamentally sound. Remember, it's the only company I've ever seen in my life, especially this size company, where its competitors are still in talks to run like their manufacturing part of the company. That's insane to me. I've never heard of that. But that's how badly ran they are. So we'll see if this new CEO can turn things around. And they do have the government in their back pocket. Okay, your tax dollars are working hard for that company. Now, when you look at earnings here, Li Auto is about the only one I can think of, just because Chinese stocks are, you know, still decent, still doing their thing. And then data tomorrow, I never really like to look at this, but you definitely will see this. Preliminary University of Michigan consumers in it, and inflation expectations after the bell. So anything to do with expectations and sentiment, people are going to be paying way more attention to, because that's really a big thing, okay? So don't forget, put the questions at the bottom for Saturday's video. I'll be more than happy to answer them. Think about hitting that like, subscribe button on your way out. I certainly appreciate it. I really do. And think about signing up for the membership less than McDonald's combo. And let me know if you have any suggestions of the way I can improve that. And I certainly will take it to heart. And I'll end up seeing you guys on Saturday. So enjoy your Friday. Hopefully you get some green.